Hi, welcome to this AQA A-Level Business revision video focusing on 3.5.2 Analysing Financial Performance. In today's video, we're going to cover break-even, the concept of contribution, and break-even charts. A quick reminder that my teaching here is separate from any of my teaching and consultation roles in any and all schools and academies throughout the country. My name is Mr. Giles. Let's get down to business. So break-even is when total revenue is equal to total costs. That's the description that we're going to use. It's also a formula. What that means is that the business has made enough money from selling goods and services to be able to pay all of its total costs. Now, a quick reminder that total cost is fixed costs plus variable costs. If you don't have a good grasp of those concepts, you need to go back to my Unit 1 videos and watch them because we're going to be using that language quite a lot here. But what's the point of that? Why do you want to know when you don't make a profit and you don't make a loss? Well, we can work it out as a formula and find out exactly how many units that is. And if you know how many units it is to break even, you can use that as a target for your employees, for your production staff, and then you could even speculate and start finding out how many units you need to sell to make X amount of profit. And then you start using that as a target, and then you can break that down into monthly, weekly, daily targets, and then away you go. So it's quite powerful information. It also helps you to understand if you're not going to break even, how far away you are, and how much money you might need to accumulate from somewhere else. So that's the purpose of it, that's the point of it. Let's have a look at the formula. So the formula here, break even is very simply the fixed cost of the business divided by the selling price minus the variable cost. Now, the bottom of that formula is known as contribution per unit. Okay, contribution per unit. Now, what you can do is you can do that as a wholesale bit. So rather than do it per unit, you could just do it wholesale as the revenue minus the variable cost, the totals of them, and you'd probably still get the same answer. Okay, so here we go. We've got the fixed cost of the business. We've got the selling price and the variable cost. Here's an example down here. Our fixed cost of 300,000, so that's our rent and all that kind of stuff. Our selling price is £3.99. We're obviously selling something cheap. And our variable cost per unit, that's the raw materials and the labour for the units, is just £2. So we take those away, it's 199. So I get 300,000 divided by 199. And that means in order to break even, I need to make and sell 150,754 units. Now, if you do that on your calculator, you'll get 753 point and a load of change. Don't use maths here. If you get a decimal place, immediately round it up because you can't sell 0.2 of a product, okay, for example. So as soon as you get a decimal place, just round it up to the next one. That is the correct answer. That's the correct way of doing it. All right. So now we've worked out our break even. We know that we can divide that up into 12, 52, 365, whatever, and get targets for our business. We need to explore this concept of contribution though. Okay, contribution. It's a difficult concept, but it comes up an awful lot. It's almost every year it comes up as a multiple choice question or a calculation on paper one. Now, it's not specifically labeled contribution, but it's part of that break-even kind of atmosphere, okay? So contribution is how much money per unit is being contributed to one of two things, either the fixed costs or the profit. So if we think back to our formula, on the top of our break-even formula, we had the word fixed costs. And then underneath, we had selling price per unit minus variable cost per unit. So let's go back to our previous example. Our selling price was £3.99 and our variable cost was £2. So each unit is contributing £1.99. £3 for the selling price, £2.99 to the variable cost. The only costs that are left to contribute to are the fixed costs. So I like to think about it that every unit is contributing £1.99 to the rent. That's a fixed cost, right? So how many £1.99s do we have to contribute to pay the rent? Well, in the previous example, it was 150,754. That's how many contributions we have to make to the fixed costs. That's how I like to think about it. Okay? Now, once you've reached that many, so 54, sorry. Once you've reached that, the next unit is contributing to what? Because we've paid all the rent. is contributing to the profit. So that's the reason why the break-even formula is really handy. Because once we know how many units we need to contribute to pay the rent, we know that every unit after that is contributing £1.99 to our profit. And it's pure profit because we've paid the fixed costs and we've paid the variable costs. So that's what contribution is. First of all, we're contributing to our rent, our fixed costs, and then we're contributing to our profit. Now, total contribution has its own formula. Over here, you can see total contribution is total sales revenue minus total variable cost. And the reason why that's important is because in the exam, they absolutely love the statement A is true, statement B is true style question where you get 4 different answers. And they love throwing in this contribution formula and trying to trick you. So they'll say total contribution equals, and there'll be some words after it. If you see the words sales revenue and variable costs, they're right. If you see anything alluding to fixed costs, it's wrong because contribution is contributing to the fixed costs. The other way they manifest this is they'll give you some numbers and then ask you to work out something that's not there. And if you don't understand this formula, you're going to get tripped up. Let's put an example on the board and have a quick look. Okay, this is probably one of the cruelest calculation questions I've ever seen on a paper because it requires serious mastery of what's going on here, all right? Now, hopefully on that side of the board, you can see the formulas I've abbreviated in green. If not, scooch back for 10 seconds and make sure you got those formulas down for total contribution. Really important, okay? So over here on the other side of the board, total cost is fixed cost plus variable cost. That's important. And then total contribution is my total sales revenue minus my total variable costs. All right. So it gives us these numbers here. It gives us selling price, total revenue, total contribution, and total costs. Give us those numbers, and then it asks us to calculate fixed cost. It's the one that's not there. So here's my strategy of how to answer calculation questions. First of all, don't panic because a lot of us would see that question and roll our eyes and move on. Let's break down what we know. Okay. I'm going to do this in pink and then hopefully you can see. So first of all, I've got total costs here. Well, I know that total cost is fixed cost minus variable cost. I put it over there. So straight away, I know I can use this number. But what I don't know is my variable cost. I don't know my total variable cost. All right. Well, where can I get my total variable cost? Well, I can get it from total contribution because the formula for total contribution is total sales revenue minus total variable costs. Do I have total sales revenue? Yes, I do. So can I work my way to this bit here? Yes, I can. Okay, I've got total cost, I've got my total contribution, and I've got my total revenue. So I could 100% work out my total variable cost and then take that away to get my total fixed costs. Okay, let's do some maths then. So I know that my total contribution is my total sales revenue minus my total variable costs. I've got 2 of those numbers. I've got my total contribution, 15,900. I've got my total sales revenue, but I haven't got my total variable cost. So I simply just write the numbers I've got. Now you need a basic understanding of mathematics to know that you need to move one of those numbers to the other side of the brackets, okay? So if I move 22,000 over here, it's a plus here, it becomes a negative over here. 15,900 minus 2250 gives me 6,600. 6,600 is my total variable cost. Because if I replugged those numbers back in, so 22,500 minus 6,600, apologies, I would end up with this number here. So all I've done is I've taken my knowledge of the total contribution formula. I've realized I've got 2 out of the 3 numbers I need. So therefore, I can start working out my total variable costs. Well, what's the total variable cost useful for? Let me show you. So I've got my total variable cost number. Now I'm trying to work out my fixed costs. And I know that fixed costs are in my total cost formula. So I write out my total cost formula. Total cost equals fixed cost plus variable cost. I then fill out the numbers I have. I have the total cost, 20,650. Do I have fixed costs? No. But I've got variable costs now because I just calculated it, 6,600. And again, a bit of quick maths. Over there, 6,600 is a positive. If I whip it over to this side of the equals, it becomes a negative. So my fixed cost becomes my total cost minus my variable cost to give me this number here. And again, if you plugged those two numbers back in up here, you would arrive at the correct number. As I say, it's a very cruel question and it's very difficult to explain via a video, but hopefully you can see that your mastery of these formulas will allow you to easily answer these questions, even when they look quite intimidating on the face of it. The first thing you've got to do is just write down what you know and start filling in numbers, because you'll see trends, and then you can just do simple maths and move things around. Okay, lastly is the break-even chart or break-even graph. Now, they're very rudimentary and pretty simple to understand. It's the questions they ask that get really tricky. So let's break it down. Our two axes. At the bottom, we've got units. At the side, we've got money. I've just done it on the side, so it looks a bit weird, okay? So it's units and money, okay? Now, the first line we always consider is the black line here, and it's total revenue. Total revenue is the line that starts at zero. The line that's missing on here is variable cost. That also starts at zero, but I never plot that because it's almost useless at that point, okay? We don't need to know our variable costs, all right? So revenue starts at zero. Why does it start at zero? Because if you sell nothing, you make nothing, okay? That's where it starts. And then usually it's the line that hopefully is the one on top. Up next, we've got the pink line. That's fixed costs. And hopefully, if I've done a good job, that should be a nice straight line, a nice horizontal straight line, because fixed costs, as you know, do not change with output. Again, if you don't know these concepts, go back to Unit 1. Okay, the video's for that. So, regardless of units we sell, our fixed costs stay the same. Wonderful. And then the blue line is total cost, because we know the formula for total cost is fixed costs plus variable. So that line must start where the fixed cost line starts, which is why it starts here. And then the gradient, i.e. the angle of that line, should mirror the variable cost line if there was one. So if I was to draw a variable cost line, I would start at zero and it would be the exact same gradient or angle as the total cost line, which is why I don't bother drawing it, because you get the general idea. Okay, so we can see here, we can interpret from this very poorly drawn diagram that our variable costs are not all that expensive. They don't ramp up very quickly, but our fixed costs look to be quite high. All right. Now, where the total costs and the total revenue intersect, this bit here, this green bit, that is the break-even point. And what they often do is they often draw a dotted line down and they give you the number of units that is. Okay, so there are two things we need to know in this graph. Now, that's the basic understanding of it, pretty straightforward. There are two things we need to understand. Number one is the margin of safety. Number two is when the lines change. Let's look at margin of safety first. So the margin of safety represents how far away we are from the break-even point. And the reason why that's considered quote unquote safe is because if you're only breaking even, you are but 1 unit away from making a loss, and that is considered unsafe. So if my current break-even point is 50 units and I'm currently selling 90 units, then my margin of safety is the difference between those things. So 90 minus 50 to get me 40 units. So I am 40 units into the margin of safety. Now, they don't always ask you to do it this way. Sometimes they give you the numbers and they ask you to do the formula. So they'll say a business is currently selling 100 units. Here is some numbers, and they'll give you selling price, fixed cost, and variable cost, sorry. And then they'll say, what's the margin of safety? And you have to do the break-even calculation first, then you can do the takeaway. So the margin of safety, what is the difference between the break-even point and what the business is actually selling? Now, the last thing to know about break-even is they love playing with the lines. Again, this is a very popular multiple choice question. So what they'll say is, what's the impact on the break-even point if, and then they'll give you a scenario. So in here, I've drawn this dashed blue line. Hopefully you can see it. And I've called it TC1. So this is total cost 1. And what's happened here is that the total costs are still starting at the same place as the fixed costs. So what that means is that of the two parts of total cost, the one that's changed must be variable cost. Because if I remind you, I told you that total cost, the gradient, i.e. the angle of the line, is made up from the variable cost. So where that line starts is fixed costs. What the angle of it is the variable cost. So here, it's suddenly become much more steep. Okay, so the variable cost must have gone up. That's what that means. So the variable cost per unit has gone up. So the gradient of that line has tilted upwards. Okay, it's become a steeper line. Now, if the variable cost went down, the line would become shallower. If the fixed costs change, they went up or down, both of those lines would literally move up or move down. So where they start would move up or it would move down. And that's what they like to do. And then they say, well, what's happened to the break-even point? And then as you can see here, the break-even point has moved from where it was down here at 50, and it's moved all the way over here closer to our margin of safety. Okay, so closer to our actual unit. So our margin of safety here has decreased significantly. Okay, so that's the lines on the break-even graph. So the gradient is to do with the variable cost, i.e. how steep that line is, and then where those two lines start is to do with the fixed costs. And then obviously if the selling price changes, then again, the total revenue line might become steeper or shallower. So if they put prices down, it becomes shallower. If they put prices up, it becomes steeper. And that has an impact on break even. If you have any questions, please leave them in the comments down below. You stay safe, and I'll see you in the next one.